Guys, welcome back to the channel, and today finally the video about how I pyramid into setups is coming out. I know you guys have been waiting for this one for quite a while, so today I will show you how you can turn a setup which usually would have given you maybe 2-3 R, you can turn into a setup which will end up netting you 8, 9, almost 10 R depending on how many opportunities to pyramid into the setup you have. And I will show you today how you can do that while keeping your maximum open risk always at your same maximum exposure you've defined for your risk management. So as you can see here now, we have here a higher time frame market maker buy model, which we are anticipating to perform. Always the market is moving in higher time frame and lower time frame market maker buy and sell models. So price is always delivering price from buy to sell side in a market maker buy or sell model. And within higher time frame market maker buy or sell models, you have lower time frame market maker buy or sell models. For example, this is the sell side of the market maker buy model, and inside the sell side here, you can find lower time frame market maker buy models inside the retracements, for example, from here. This could be, if you drop down to the lower time frames, this will be a lower time frame market maker buy model to run the stops of this week high. Maybe we have key level here, bearish one, and then you can see here that's the manipulation. Then we see the continuation of the higher time frame market maker sell model. And then again, the same thing here. We have a lower time frame market maker sell model being initiated once we have run the stops of this week high. And then once we have hit the higher time frame key level, took out the higher time frame sell side liquidity pool, then we see a consolidation, reversal, and then we wait for an hourly change in order flow. For example, if that's a daily key level, you want to wait for an hourly change in order flow to then confirm the reversal of that market maker buy model. And let's say you have a bullish bias now for the week, and you obviously want to look for longs. For example, here we have Monday, Tuesday, maybe consolidating and retracing into the key level, and then we form the hourly change in order flow. You can see here we have a high probability change in order flow. We have a strong high here, which run the stops of the initial manipulation into the key level. We get a change in order flow on the hourly. That's always the most important thing. Before you get into a low risk buy, which is the first opportunity to long in a market maker buy model, you always want to make sure that the reversal has been confirmed, and then we have also this placement, which indicates institutional sponsorship behind this move. Also, those are the exact levels where you want to look for S&T with correlated assets. For example, if you trade euro, you want to take a look at DXY and pound. But always remember, S&T always needs to be confirmed by a change in order flow. So you can't call a divergence at the lows in S&T without the hourly order flow then confirming this S&T. Without a change in order flow, S&T is nothing but markets being decoupled at the extremes of the range, which is a normal thing you see occurring. Now, as mentioned, we formed a low risk buy, and there's the first opportunity to get into a long. Now, what I want to see here ideally is we have a value gap forming here, or an inverse value gap. Even better would be a balanced price range, meaning we overlap bearish value gap with a bullish value gap on this buy side. And then I want to see a weak low to form above this key level. That's the initial retracement into that new dealing range we have formed here. So price retracing, the initial retracement is always engineering liquidity. So that's the move where you don't want to long. You want to wait for price to run this low again. And then you have two options. You can say, okay, I either turtle soup buy this low, or you wait for a lower time frame confirmation, for example, on the M5. That's an hourly bullish dealing range. You wait for an M5 change in order flow to confirm this low risk buy. Now, how do you decide when to wait for a lower time frame confirmation or when to turtle soup this low? First of all, it comes down to personal preference. Some people prefer to wait for an extra confirmation at the low risk buy. Other people might say, I'm fine with that. How I do it, I usually have two rules. If this market maker buy model is aligned with the daily and weekly order flow, then I market long below this low put my stop at the higher time frame validation, and then I aim for the buy side. Obviously, along the way, for example, at this high, you can take the first partials. Now, how much do I risk? As mentioned, if it is with the higher time frame order flow, so the daily and weekly is bullish as well, then I might risk 1%. If it's against the higher time frame order flow, so let's say the weekly and daily order flow is bearish, then I only might risk 0.5% on this first long opportunity. Or maybe I entirely wait for a lower time frame confirmation. That's always discretionary and depends on the situation and the overall context. Now, let's say you risk 1% here, right? You risk 1% here on the turtle soup, and then you have your first position. At this point, you're risking 1% of your total equity. So at this point, you're risking 1% of your total equity, all right? Then as mentioned, once you turtle soup the low, you drop down to the lower time frames. In this case, if it's an H1 dealing range, you can use the M5. If it's an H4 dealing range, you can use the M15 at least. You drop down then to the respective time frame, and then you look for your lower time frame change in order flow to confirm this low risk buy. Meaning, if you then zoom into this pattern here, the lower time frames, we have this H1 week low, which is that one here. And price comes lower and sweeps that low, right? And then you want to see on the lower time frames on the M5 if you can frame a lower time frame confirmation here, and maybe something like that. Once you get a lower time frame confirmation right here, which would look like something like that, and with a double sweep, then change the order flow, you can then add a new entry, which is the lower time frame confirmation. So you would enter somewhere here, and then put your stop below that low, which then is that low here. Now, once you have that confirmation here, and you enter the second trade, you have to move your stops of that trade to that low, which is this low here now, because you have now a new validation. Meaning, on this initial entry, which you have previously risked 1%, you are now maybe only 0.2 risk in open risk. You have trimmed your stops, so now your total risk is only 0.2, right? Remember, we want to never exceed more than 1%, maybe 1.5%, as mentioned, depending on your personal risk management. But now if you have 0.8% of new open risk, we can add that to that trade here. So we can add now here this long, which is then on the higher time frames, something like that. Stops are here, that low. TP1, final TP, for example. Let's say we aim for that high, or about 3.6 R. Remember this initial entry here had around 3 R. Right? So we note down, okay, first setup we are up 3 R if it hits the full target, right? So that's a 3 R setup, but now the stops are obviously here. And then this one here, let's say for the first high here is 3.5 R, okay? So in this one we have 3.5 R, and we are risking 0.8%. Why? Because we still have 0.2 open risk here, 0.8 here. So in total, we are still overall risking 1% if we are wrong and we get stopped out. Now, if we are right, and then price continues going higher and takes out this high here, so we hit the TP of that lower time frame confirmation trade, meaning we've realized then 3.5 R times 0.8%, which is 2.8 R of realized profits in percent. So on this trade, you make 2.8% realized gains. Now, if you take a look at our first entry, we are up at this point, if we go back to that low, about 1.8 R. So in total, you would be up on this trade 1.8%, on this 2.8%. So in total, if you would close both trades here at this high, and you don't want to wait for that high, you would be up 4.6%, while never exceeding 1% total risk. Let's say you expect price to continue being bullish and go for the final highs here. Then obviously you will get full free R here. You can even leave partials of that one, but then you have to recalculate your profits, obviously. But let's say you close this one here, this lower time frame confirmation, to lock in some profits. And then we take out this first external high here, as mentioned, and then price starts to consolidate, right? We reaccumulate, and price forms the second stage of distribution into those highs here. Now again, what can you do? You can obviously now again enter and buy below that low here, for example, and put your stop at that invalidation, as that's the last hourly stop run, and that's the higher time frame invalidation. You don't put your stop somewhere here, you put it here. But then you notice risk to reward is only 1.2, which is obviously too low. So what do you have to do? Again, you drop to the lower time frames and wait for your lower time frame confirmation from below that low, which is this here. So you wait for the exact same pattern again below that low here. Now, if you get that confirmation here, again, you can enter the trade here. So now you have a lower time frame confirmation trade, and you put your stop here, TP obviously here, and you see it's again 2.5 R. Now, how much can you risk on that trade? Again, what do you have to do on this trade here? You have to move your stops now in profits below that low here. So your stops of all trades are now below that low. If you're still holding partials from that trade because you have not closed everything here, you also move your stops here. So at this point, all of your trades, even if you get stopped out on those two ones, you will be in small profits. Now again, what can you risk on this new trade? You can risk 1% here, because now your open risk is 0. Basically, if you get stopped out, you even end up in profits. So you can add again 1% here. Now, if you are right again, and price finishes the market maker buy model and hits that high, you make again 2.5 R with 1%, which equals on that trade 2.5% of gains. So now in total, if you, let's say you closed this one here, this one also here, and the first lower time frame confirmation you closed at that high here, then you would have made in total 2.8% plus 3% plus 2.5%, which in total equals total gain. We have 3% plus 2.8% plus 2.5%, which makes around about 8.3% gain in total, right? So we have an 8.3% gain in total, while never risking more than 1%. And there's the power of pyramiding into trades. But the problem is here, those types of setups you don't get every day, sometimes not even every week. Those setups you maybe get once, twice, or maybe 3 times a month if you only trade majors. But if you go into the trading day each with the expectation of finding such opportunities each day, you will lose money on all of those things because you just force those setups and you will get stopped out prematurely. So you really have to make sure that you get a higher time frame understanding of price and really have to wait for those A+ setups which form on the higher time frames, daily key level, hourly change in order flow, which would then be a one shot, one kill framework trade. And then you have those opportunities. If 1 or 2 weeks in a month have those setups on a few of the major pairs, then you can really make easily double-digit returns each month on average. Obviously, to do this and execute this every day, it needs more practice. It's easier said than done. I want to show you a framework of this week where this potentially could be the case. I want to show you how I was trading it live, sharing each daily trade idea in the Discord, giving my exact expectations. And I will show you guys now how it's looking right now and what trades I have taken so far this week. So we are on Euro USD. We are now here on the daily chart, and that here is last Friday's candle. We wait for Monday to open. Monday was a holiday, therefore we let Monday pass and see what happened. What happened here? We took out the previous day's high on Monday, which is a daily external high of that dealing range here. We have the range low, we have the range high. And price engineered this week low. Remember, on the market maker buy model, I also told you price tends to take out the initial retracement, which engineers liquidity. On the daily, we apply the same concept. We engineer liquidity, have taken out an external. So now we wait for the hourly order flow to confirm bearishness. Once that happens, we can aim for this low in price to get taken out this week. So we drop down to the H1. Now we wait and see how we trade in Asia. We've already formed this hourly order block here, this bearish one. But price is still respecting this bullish value gap right below. And now we wait, and then we want to see if we can frame a potential market maker sell model to form here. We have the consolidation here, reaccumulation, and now we want to see if we can confirm the reversal and then also the low risk sell, which is the first opportunity to look for a sell in a market maker sell model. So we have Asia here, and Asia sweeps those equal highs into this hourly order block. Now I told you guys I won't turtle soup buy low risk sells if it's against daily order flow, which it is because daily order flow is bullish on the higher time frames. So in this case, I would need to wait for a confirmation on the lower time frames. Now we have this H1 fair value gap here, which we formed ahead of the manipulation. So now I want to see price closing at least below the middle of that bullish fair value gap. Close below, and then on the next candle in London session, we form a bearish value gap, and we overlap that with this bullish one, meaning we have here an H1 bearish balanced price range, which validates this as a bearish order block, and we can then say H1 order flow is definitely showing signs of bearishness here, meaning we can now take our low risk sell here. So I will short this value gap on a retracement and stops above the strong high. Now, where do I aim for? Obviously, the final target would be this low, but my first partial will be at the Monday lows for about 3R. And on this trade now, I'm risking, in this case, 0.5% because it's against daily order flow, but you could also use 1%. As mentioned, it's really up to you. So we entered here, and then we continue. Also, we now close below this bullish value gap. So now you want to see price using this as level for distribution lower. And you can see here price retraced and then sold off lower. Now in the lower time frames, remember we need a new manipulation before we can move our stops. We can see here we had no major manipulation really. We just slowly dropped lower and then retraced and then expanded into the lower targets. There was not really any new invalidation which allowed us to move your stops here. Then price drops lower and we are about to also close the daily candle. So we close here and we hit the first partial here. I initially wanted to leave partials for the way down here, but I forgot to remove my limit order here, so it took me out with the entire size here, unfortunately. But if I wouldn't have forgotten it, then I would have left partials for that low here as well. So now price took out this first low. Remember on the buy model I showed you, we had this first high. Here we have this respective low. And now we have on the H4 also formed this inverse value gap. Now again, if we take out external liquidity, that range, What is price doing? It's engineering a weak high on initial retracement, and then on the manipulation, you want to look for your short continuation. Now, that was exactly what I was calling out for my members in the Discord, something like that. And that was my trade plan for the next day, which was today. And we drop down. Now we take a look what actually happened. So in Asia, price retraced, and then we engineered this H1 high here. Now we do have news in late New York session. So price expanded late in the day. No news in London, meaning London is likely going to be consolidation. So then lunch, we take out those highs. So we have the manipulation here. And we can drop down now to the M15 and see what happens here. Now, we swept the high, form again a balanced price range. So you could be shorting here. Again, stops above here. But in this case, I was waiting for news to pass because we had the manipulation in lunch and I did not really trust those lunch highs with news coming up. So I was waiting for post news. But if this manipulation would have happened in New York session, then I would have taken this trade here as well as my next pyramid entry. And then I would have moved my stops of this trade also to the same lows. So in this case, the stops of that trade would be in profits, and then I could risk again full size on that trade. So I'm still then technically risking only 1R on my setup. Now how I entered here on a pyramid was, I was waiting for news to pass. There we had news, and then we formed this bearish M15 imbalance, which I then used to short, and my stops were above the New York session highs, somewhere around here. And then TP, same thing here, the final lows, for about 2.2R. And that's pretty much the trade I'm running in right now. Because it's late in the day, I moved my stops now above this high here, because I don't want to see price going there. As you can see, we are about to take out this high, but I don't want to see price going above here. So I moved my stops here on that trade. And in case I get stopped out, I will reevaluate tomorrow again to re-enter. But for now, the bias is still to aim for that low here. And yeah, you will see tomorrow how this plays out if I get stopped out here at break even. But that's just a breakdown in the live markets right now, how you can use that or how I used that this week, which I just taught you in theory. And yeah, if you want to see those breakdowns in the live markets every day, I go live and I share my updates also in the Discord, then make sure to check out the link below where you can sign up a few more days until the last day of April for the May memberships. And also the 1 year SEN anniversary bundle where you get the full Foster protocol and also 3 months access to the SEN Capital Discord server to learn the stuff I teach in theory and also with me in the live markets. Check out the link below and see you guys then in the next video.